Welcome back, everyone. We have an update from Battery Mineral Resources Corp, which trades on the OTCQB under the symbol BTRMF and on the TSXV under the symbol BMR. It's a battery minerals company providing shareholders exposure to the global mega trend of electrification while being focused on growth through cash flow, exploration, and acquisitions in favorable mining jurisdictions. Please welcome President and CEO Martin Kostuik. Nice to see you, Martin. How's your update today?
Oh, nice to see you as well. Thanks for having me. How is the conference going?
It's going great. It's a full day, and we're halfway through.
Okay. Well, I hope I can add some energy to the conference here. Looking forward to it.
All right, go for it.
Okay, I would like to take everyone through a brief overview for those who aren't familiar with the company and just really give an update from the last time I spoke to the conference in terms of where we are in advancing our company in general. Battery Mineral Resources, as you said, is a battery minerals focused development company. And we are in the process of transforming the company from a development style company into a cash flowing entity, which we believe is the appropriate way to bring value to the shareholders, getting into profitable cash flow and then going from there. And I'll get into some of the details of our plans. But first, before I get into that, I want to say that I just lied a little bit to you because we actually are a cash flowing entity. We have a wholly owned subsidiary, which is not in the mining space, but it is 100% wholly owned cash flowing company called ESI Energy Services, which is based in Phoenix, Arizona. This company produces anywhere from $4 to $5 million in EBITDA per year, and it services the pipeline industry, whether it be oil or gas or carbon dioxide or any other need for pipelines, and also the renewable space. And there is a picture in the top right of this slide here that really explains exactly what the company does. They produce and sometimes sell, but mainly lease equipment to contractors who are out in across North America and in Canada, who are in the business of laying pipelines or otherwise different materials that need to be buried on job sites. So that could be at a wind farm or a solar farm or in an oil and gas pipeline job. And when the contractors excavate the ditch to place whatever utility needs to be buried, the company is very attractive to the contractors, because it allows them to be very efficient and cost effective in terms of placing material back into the ditch, into the engineered spec that is required. And their equipment allows them to do it very efficiently rather than bringing in materials from nearby quarries and whatnot to fill the ditch back in. So it's a great company. We had a very, very good year last year and looking forward to another good year. And I must say that over the last 3 years, they've transitioned and been able to successfully transition their revenue stream from oil and gas, which was their bread and butter for the last 25, 30 years, in fact, towards the renewable space. So they're very, very active in helping contractors build solar fields and wind farms. So having said that, we are a cash flowing entity, and ESI has been very helpful in terms of our goals of developing our company and providing cash to that. So, and that's just something to keep in mind. We have a cash source, and we haven't gone to the shareholders very much at all over our existence, which has been almost 3 years now that we've been public. We do have a portfolio of battery minerals items here across the globe. We have cobalt in Northern Ontario, cobalt in Northern Idaho, lithium, a very early stage lithium project in Nevada, and we have graphite in South Korea. All of these are in various stages of development, and we plan on advancing them as time goes along, and more importantly, I think for shareholders, as cash is made available from our newest project, which is at the bottom of the screen, a former producing underground copper mine located in Chile, which we're in the process of putting into production. This mine has about a 10-year operating history. Most of that time it was operated by Glencore. And we were able to purchase the assets of this mine about 2.5 years ago and have been very busy looking at opportunities and risks in terms of deciding whether we're going to put it back into production. And in fact, very recently, about a year ago, we made the decision that after looking at all the risks and opportunities, that it is the right thing for the shareholders to invest in putting this back into production. And that's really what this slide is about. Job one for Battery Mineral Resources to get into cash flowing and provide value to shareholders is to put the mine back into production. Once we do that, then we have cash available to then go and invest in the properties and the projects that I showed you on the previous slide, namely Northern Ontario, Northern Idaho, and Nevada, and also South Korea for the various commodities that we represent. And I must say, one thing that we've discovered after becoming very, very involved with the mining scene in Chile is that there's an incredible amount of opportunity for us to scale the company once we're into cash flowing and realizing that new value that should be forthcoming from that to acquire very similar projects that we're endeavoring in right now. So lots of opportunity in Chile. It's a great country to work in. A few details on the mine itself. As I said before, it's a former producing mine with about a 10-year operating history. All of the fixed assets that you would expect a recently operating mine to have are there. So the investment to put this back into production is quite reasonable. It is located in a very sort of populated area in terms of mining for Chile. It's in the northern quadrant, region 4 of Chile, if you're familiar with the country. As you can see, it's about an hour's drive from the coastline, so we're not at a very high elevation. We have all the infrastructure, the power, the water, the road systems, and access to ports, which is very important to us because we will be exporting our copper concentrate to the markets via the ocean. A quick note on why we think this is a great investment for our shareholders is really the focus on maybe the right-hand side of this slide, which shows the relatively modest entry point for us to acquire the assets of this mine. And because of the brownfield nature and the recent operating history, again, a very modest amount of money to put this back into production, roughly $15 million. And again, because of the brownfield nature and the low capex required, it is a relatively short time frame to get this thing back into production. And you know, historically, the mine produced about 25 million pounds of copper in concentrate at a margin of about $1.55 at today's prices. So, you know, all in all, a very good investment with a nice return, generating anywhere from 30 to 50 million in EBITDA as we move along and get into full production there. I did tell you about the operating history. You can look at this probably a bit later, but as you can see, Glencore was involved and operated it. They ended up selling it because it became non-core for them, which happens for big companies as they grow. Another company picked it up and operated it for about 18 months. They unfortunately found themselves in a steeply declining copper market, and they had to shut the mine down in April of 2020 due to low copper prices. And of course, COVID didn't help that situation. But on to the future. Since we acquired the project, we have invested a fair bit of money into de-risking the project, starting with a drill program, which finished in August of 2022. We were able to increase our resources by a tremendous amount. We now have about 6 million tons in indicated and 3 million tons of inferred. And just to put that in perspective, the mill itself consumes around 1 million tons of resources a year. So a nice runway in front of us, and a nice vote of confidence that we are able to continue adding tons in the future. So that brought us to our internal reserve studies, which we engaged in with our own team and the help of third parties for the process, for the purpose of going out and looking for funding. And that's where we are today. We are in the middle of beginning the restart right now. We've increased our activities there. The mines are ramping up right now in terms of rehab and getting ready for production. And we fully expect to be producing new ore, fresh ore through the mill in Q2 of this year. So very exciting for us. We are in the middle of a financing, which is going quite well. It's a three-pronged financing. One of the sources of financing to get us to the 15 million that we need is a convertible debenture, which we're in the process of finishing up. It's gone well. Our second and third funding sources are two different pieces of debt that we're able to bring in, which we're in the final stages of bringing in. And so we're we're very happy that to be able to report that all of that activity is going well while we're also restarting the mine. So looking forward to getting things going down there. I'd be open for any kind of questions. I know we don't have much time.
Great job, Martin. Okay, a few questions for you. Olivia Donahue asks, is the plan to grow through acquisition?
Absolutely. You know, I think first things first, we have to show ourselves and our shareholders that the restart of the mine is successful. And with that should come a very healthy re-rating in our valuation. Then we turn around and use that newfound valuation to look at projects and engage with people for mergers and acquisitions, which we've been doing quite a bit of lately.
A follow-up, Adam Phelps says, ESI, this is the leader, but is it growing or is it funding the other projects?
No, we're certainly relying on ESI to help us and to keep from dipping into the shareholders' pockets. ESI just had a very, very good year, about a 20% increase over last year in terms of revenue. So they're growing. They're doing a very, very good job of shifting away from oil and gas, which isn't very busy at all, and focusing on the renewable space.
And Mike asks, are you able to put the mines into production on your own organically?
Yes, we are. We obviously are relying on experts and vendors and contractors as we progress through getting the mines ready for full production. But that is the purpose of raising the capital that we're in the middle of raising, is to fund that and then get into cash flowing shortly after.
Well, congrats on this. Great job with your update. We appreciate you coming on the conference, and we look forward to future updates.
Thank you very much.
All right. Thanks, Martin. Stay with us, everyone. We'll be